Hi, this is going to be a discussion of cash discounts with a comparison of gross and net methods. And the only difference between the two is under the gross method, you record the sale at 100% of the selling price and wait and see if the customer is going to take advantage of a discount. Whereas under the net method, you assume from day one that the customer will take the discount, so you record the sale at the net amount, and then if he doesn't take the discount, you're going to have some interest revenue. Here's an example of Mitchie Company, who offers a 210 net 30 credit term to all its customers who purchase on account. And once again, that 210 means a 2% discount if payments received in 10 days. Otherwise, all of it's due in 30 days. We have a customer that's going to come in and purchase. So on October 5th, Mitchie sells merchandise to Smith Company for $20,000. Smith makes a partial payment of $14,000 on October 14th, and then he pays the remaining amount, $6,000, on November the 10th. So here's a comparison of the two methods in a little chart that follows. The gross method once again assumes that the sale is going to be recorded at 100% of the selling price, so you debit accounts receivable to increase that asset by $20,000, and you credit sales revenue to increase that revenue account by $20,000. On 1014, when cash is going to be made as a partial payment on this $20,000 accounts receivable, the customer sends $14,000. But while he's satisfying $14,000 of accounts receivable, because I offered him 2% off, he only has to send me $13,720, which is 98% of $14,000, in order to satisfy that debt. The other 2% is debited to the contra revenue account sales discount, which brings my sales down to actual amounts. And then finally, when he pays on November the 10th, the $6,000 is going to have to be paid to satisfy the remaining accounts receivable because no discounts are allowed. Under the net method, on the day of the sale, you're going to record it at 98% of the selling price, so 98% of $20,000. So if a full payment was received within the discount period, the total discount would be $400. On 1014, when the customer sends in payment, remember we already assumed he was going to take the discount, so he only has to send in $13,720. That's $14,000 times 98%. And then finally, on November the 10th, when the final payment is made, we assumed he was going to take the discount. He didn't take that discount, so the accounts receivable is credited for $58.80 to bring it down to zero, but he has to send $6,000 to satisfy this debt because he didn't pay it on time, so I wind up with interest revenue of $120. Notice that I have sales revenue under the gross method of 20 minus the sales discount, whereas under the net method I have sales revenue of $19,600, but an additional interest revenue account of $120.